Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Thursday, May the 30th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create 4 main hypotheses for the day. We are not doing this to hedge our bets. We are doing this to prepare a plan for whatever the market brings at us. We cannot predict what the market's going to do, but we need to have a plan in place, and then we can watch what the market is doing on the RTH Open and then determine which plan best suits the market, and then we can execute on that plan. Trying to formulate a plan on the fly is only going to cause you indecision and missed trades. This is a subscription room, so if you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There is no website, there's no blog. This is not a commercial venture. We do this live in the go-to in the pre-market session, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, yesterday we were looking for a rotational day with an upside bias, and our main hypothesis was an open auction in range, a move down, towards the 48, possibly even lower towards that 41, 42 area, and then we were looking for buyers to step in and start rotating us up, and our main target on Hypo 1 was the 57 and a quarter, 57 naked VPOC, and then we were looking for us to chop around and try to make a late day probe up through the 23.60.50. But we were looking for some type of a rotational day. We were not looking for range expansion, and basically we had an inside day. So we had an inside day, okay, call it a Mr. Sneaky on a daily, where we traded inside the range of the prior day, and we closed at the 57. Our close was 57, and our VPOC came up to where the VPOC is. So within the day, we accepted price at the 57 area again. Okay, which is just below our microcomposite VPOC at the 59. But we'll get to that in just a minute. Let's take a look at the news. We did have news this morning. We had Canadian RMPI, IPPI. They both were, one was a beat, one was a little bit of a miss. GDP and unemployment claims in the U.S. Were both higher than expected, and then GDP price index came in at 2.1, a little bit higher than expected as well. At 10:30, we have natural gas, and again, as we've been talking about all this week, we have had Fed members speaking, every day of the week, and we have Kaplan speaking. Remember that next week we have the Fed minutes, so these Fed members, as they speak, are causing some jitteriness in the market. And then there's some news coming out tonight in Japan, but other than that, not much else. Just taking a quick look at tomorrow's news. Tomorrow we have the Canadian GDP, and then we have core PCE pricing, personal spending, personal income, and Chicago PMI, and of course the another FOMC member speaking, and then we've got the University of Michigan consumer sentiment and inflation expectation, and that will be it for news this week. Now each day I like to take a look at the market macro to micro. I start with a basic candlestick chart, and I use a 9 EMA and a 20 SMA. What I'm looking for is where we are within the trend of the of the time frame, and I'm looking for slope and separation of the two moving averages as my gauge to the strength of the trend, where the trend is being challenged or violated, or where it will be challenged or violated again. On the monthly, multi-year upward trend, beautiful upward trend. Then at the end of the 15, beginning of the 16, we had a challenge of the trend. They took it back. They came up here. We had this beautiful continuation pattern, rising 3 on the candlesticks, and then we had a continuation. And so far in 17, we've had one time framing higher. Now, our open of the month is 2364.75. So we are currently right now trading below and could be our first bearish month. We're going to be looking at critical mass today, but the trend itself is very much in place still. On the weekly, we've had a beautiful upward trend. Then we had we had 6 weeks of one-time framing, and then we violated the one-time framing. That was our first sign of weakness coming in. And what do? We come down and test the 9 EMA, and so far we've challenged it, but we've taken it back. The trend is still in place, okay, and does not get challenged again until we get below the 2340.75. On the daily, we had this nice trend, the blow off top with the foo bar, Mr. Sneaky, tech gap, closed the tech gap, tried to get a continuation pattern, failed last Tuesday with the significant breakdown candle, and then we've crawled our way back up, and we're currently sitting in between the 9 and the 20 at a decision point. And we will either continue the trend up with a bounce, or we will break down and we'll get a continuation pattern to the downside. Going to the intraday, we are currently in an upward trend on the 4-hour. We're holding above the 9 and the 20. Another beautiful example of there's two of them here. I want to show them both of them because this pattern works on all time frames, okay? You just have to play it on the time frame. Here's a good example of one here. Here's a foo bar. Here's Mr. Sneaky, creates the technical gap, takes the technical gap back. Here's a foo bar. Here's a Mr. Sneaky, closes the technical gap, okay? Here's a foo bar. Here's the Mr. Sneaky, creates the technical gap, closes the technical gap. I swear to you people, this is one pattern that will make you money time over time over time. Okay, it is my favorite trading pattern. And you can trade it on whatever time frame you want, but just remember the parameters of the trade and the fact that, if you're trading it at a longer time frame, you have to understand that it's going to take longer to develop. I mean, this took 4 hours to develop the Mr. Sneaky before you could get short on this bar towards the technical gap close. Holy cow. My throat is really sore this morning. Let me just take a sip of my tea. So the trend is intact, but we are challenging it right now. Going to the 1 hour, a little bit of a different story. We have rolled over and we are below the 9 and the 20. Don't have a lot of slope and separation yet, but we are seeing some weakness coming into the marketplace here. There is a naked cross on the 1 hour up here at 23.57. So if we get above the 55, 75, that's your target right there at the naked cross. Going to the 30-minute, we are in a downward trend, but they tried to challenge it. We're failing right now. We're below the 9 and the 20, and have pretty much a downward trend starting if we can't hold this 23.55. Going to the 15-minute, very strong trend, good slope and separation. Then the news comes out and we take it back, and now we had left a naked. Here's a good example of a shorter time frame naked cross. We create the naked cross with the move up. There's the naked cross right there. What do? We come down and we close it, and now we're breaking below the 9 and the 20. We're seeing weakness coming in again on the 15-minute. And then on the 5-minute, we come up and then we're failing again, and we're below the 9 and the 20. So I mean, we're negative to neutral on the shorter time frames, but on the longer time frames, the trend is still intact. Taking a look at the composite. Now, I've taken the micro composite, the larger time frame micro composite, which is always going to be this black outline, and I've moved it. We've moved down and came down to the start of that gap on the 13th of February. And we came down the other day, and then we rallied. And so I've encompassed the lower distribution zones into the overall larger micro composite. It doesn't really change anything. The micro composite VPOC is still at 59, but because we brought brought the market down and then came back inside of where I was starting it. I was starting it from the 21st through to the breakout day, and that was the microcomposite that I was running. But now, because of the fact that we closed back inside this distribution zone, I wanted to encompass all of the lower distribution so I can see. I still have my smaller profiles to show me where the price acceptance areas are, but this is some of the reasoning that I bring in to why I move my micro composites around. You can see we've got a bit of a triple distribution. You can even call it a quad distribution, but the main distribution is right here around this 23.59 and a quarter. And then the second distribution, the important distribution, is down here, down around the 23, 40, 50, 40, 75 area. So currently right now we're in this distribution zone. The lower side of the distribution is 48.50. The higher side of the distribution is 63.50, and the price acceptance is at 59. So we're going to be using 48.50 as our key line in the sand. If we hold above there, I'm looking for chop in this area today. I'm not looking for a lot of movement. This is the end of the month, so there are going to be some funds that are going to be positioning themselves coming into the month, and I still think we're going to have a bit of an upside bias right now. We are one-time framing up right now on the daily, and I'm going to be gauging my over-under around the 48.50. The warning line is going to be not, you can use the 53.75, but I'm going to be using this little LVN on the microcomposite. I'm actually using 51.50 is the number I'm using. And I'll show you why when we get to the smaller time frames. But right now, as long as we stay in this upper distribution, I'm expecting chop in this area with an upside bias towards the 59, possibly a push through to test the other side of the balance up here at 63. Above 63.50, target the 67.75. Below the 48, target the 45 and the 40, and possibly even come down here to the 34.50, which will be the microcomposite value area low of this 7 days that we're in here. Okay, so taking a look at the overnight. Overnight inventory is pretty mixed right now. It's pretty neutral. I would say it's neutral to negative. This, by the way, another great example of a FUBAR Mr. Sneaky setup. I actually traded this last night. It was a really nice trade. Oh man, my throat's killing me. Excuse me for 1 second. I'm here, I'm hacking and coughing in you guys' ears. I apologize. So we've got a bit of a double distribution overnight. There is a LVN right here at 55. Our overnight low is 53 and a quarter. Our overnight high is 62.50, and the inventory is neutral to slightly negative. So taking our numbers from overnight, our overnight high is up at 62.50. So we did get the continuation above the prior day range and above the Tuesday range, and our overnight low is down at 53 and a quarter, which is just below our value area low. And then we have that LVN here at 55.50. That's going to be a trade area for me. It's also where the VWAP was yesterday. And that's all the information I really need from that. No, that one. So first of all, our daily 20-period full session ATR is running at 1691. So based on our overnight high and overnight low, our daily upside ATR target is up here at 23.70 and a quarter. Our daily downside ATR target is down here at 23.45.50. So we have capabilities of having a breakout from yesterday, either to the upside or to the downside. Our range has that capability. Now, let's just quickly talk about critical mass. I don't think critical mass is going to come into play today, but let's put it on our chart. So critical mass, we have 2 days left in the trading month, okay, today and tomorrow. Our average true range is running at 1691 on the daily. So 2 times the daily ATR brings us to 33.83. Based on the open of the month at 23.64.75, our downside critical mass kicks in, okay, at 23.30.75, which just happens to be just under last week's low. And our upside critical mass, and again, I don't think we're going to hit it today, is all the way up at 23.98.50. Which just happens to be 1 tick above our adjusted all-time high. And hey, who knows? We could have a big rally day, and you never know. That's why we mark the levels in. I'm more concerned about the critical mass to the downside, okay, because of the fact that it's not that far. If we get a trend day, we could get below that critical mass. Of course, tomorrow, those levels will change because then we only have 1 day left of trading, and they'll come much more into play. Remember that we've already breached the weekly ATR upside target off of the low of the week at 1775. So let's just put our levels in. Of course, I said I'm going to be watching that 5150 area. I'm actually going to adjust it to 52. Yesterday's open, RTH open. And then I'm going to be watching the 48.75. This is our key line in the sand. Anything below that, we're really looking to short. And then below that, we're targeting the 45.50. That's our daily downside target. It's also just above the CHVN right here. And then a little bit of, what's this right here? That's 41. So we're going to move this down to 41, and that's right at the microcomposite VPOC. Below that, okay, 39, and then of course, this whole mess down here between the 33.50 and our last week low and our monthly critical mass. And then on the upside, of course, this is the microcomposite VPOC. If we get above it and break out, I'm looking for takeout of the overnight high, test of the 63.50, and break above that 67.75. So I am looking for a rotational day today again, but I'm looking for a rotational day with an upside bias. Why? Because we're one time framing up again. Okay, higher low, higher low, higher low. So I'm looking for an open auction in range. I'm looking for an early move down towards the 53, possibly even the 52, and I'm looking for responsive buyers to step in and rotate us back up to 57. Kind of sounds very similar to yesterday. Why? Because it is. And then I'm looking for chop in this area with a push up through the 60, the 60.50 with a late day probe up into the 60. But I'm expecting rotational day basically between the 51 and the 67.75 for hypo 1. Hypo 2, I'm looking for an open auction in range, a push up, a failure to break out, or a false breakout somewhere between 60, 50, and 63. I'd be looking for responsive sellers and rotating us back down into value, travel through value, chopping, and then pushing down through and closing somewhere between the 48 and the 45. That is hypo 2. Hypo 3 is an open auction in range, fail to break the 55, push strong up, break out within the first hour above the 60.50, chop between 60.50 and 63, and then get a late day probe and push up towards the Fed number in this 70.71 and get another continuation day as we walk our way back up from that breakdown. And then hypo 4 is a open auction in range, basically chopping inside of the prior day range with maybe a late day probe, but basically another inside day as we compress and we hold inside of this distribution zone. There is going to be an alternative fifth hypo today, and the alternative is an open auction failure to break out and a strong move down, break out early, down below the 48, come down and chop around between 48 and 45, and then fail and break down and come down towards and close somewhere down here near last week's low and the monthly critical mass. And those are my hypotheses for the day. I'm still having problems with my gold charts. AMP forced us to roll over, and it's really causing havoc with my gold charts. But if we look at the composite as it stands right now in gold, I mean, basically we're breaking down right now. We've come back down into the longer time frame microcomposite here. I'd be watching this 42, 43 level. Anything below that, I'm expecting, what are we trading for? 47.10 right now. I'm expecting a bigger move down towards the 42.70 if we can't hold in the 47 range. We are seeing some weakness coming in on gold and looking for a little bit of a bigger move down now. Key area to watch if we come up into the 50 again and accept that price, look for them to test up into the 4-day microcomposite VPOC, which is up here at 53. And anything above 53, then the price discovery up continues. But you can see we're seeing some weakness coming in on gold. Sorry, this has been a long pre-market session. I'm going to cut it off right there. As always, trade well, trade safe, and we'll catch you on the flip side.